friends, good week. Vladimir here with you, and this is the weekly review for the last week of February 2012. On previous weekend we discussed about Greece issues. It might be on the middle, right, on the center during the current period, February and probably March. Oh, well, at the final we get good news from Greece. They got the money, and now they have to prove if they can use this money as it should be. I personally have some doubts about it, but it's a different story. As for now, it seems okay. Seems like the market believed them. Well, anyway, the euro dollar does. But it's still time to be careful, as we can see the gaps being closed now, right? What do I mean by gaps? On previous week we discussed about the crosses like Euro Australian, Pound New Zealandian, Euro New Zealandian and Pound Australian, and we discussed also about the indices. We can see that the Euro dollar did the move this week, right? Was on the center of the move, while Australian dollar held it and the New Zealandian dollar held it. And not just that, well, indices pretty much hold it around the same area as well, right? You can see that, right? We discussed about also the Dow and the 13,000 area, right? That's what we have here. Now the question is, what does that mean? From my point of view, this gap should continue. We should see crosses going up. Of course, we might see corrections and everything, of course, but the main idea is we still have to go higher. And this thing brings us to some interesting possible trades, and let's continue with them. The crosses will be on the center from my point of view, but also the yen pairs, which acted extremely high this week. The areas we discussed previous week clearly did not hold. It was not good areas. These resistances during the divergences, during the extreme areas did not hold, and now we reached the next areas. We'll discuss about this as well. So let's start with the crosses. Let's go for the Euro Australian and Euro New Zealandian. Euro Australian daily divergence, bullish divergence, which finally take us up. We discussed about break above this resistance will take us to the next areas. 126 should be the next one, which we're very close to. Why 126? Well, based on the duplication rules, right, of the channels, that's what we should get, and we're almost there. I believe that this pair will correct after that. It could build some flag, something like that, but for the longer run it still has to go higher. And my expectation for this pair is any bearish attempt now, any bearish move now, it could go for 100 pips or 200 pips correction, and I don't care. As lower it goes, consider another buy. We can see there are more rooms to go, and MACD just crosses new highs, and until the next divergence we have more to go. And that's why, from my point of view, I will be not surprised if the Euro Australian will go even to 128 and 130 or even higher, based to the rule, secret number 3 rule, as we know, where this is resistance number 1, resistance number 2 is current area 126, resistance number 3 will be this area around the 130, a little lower. And based on that, Euro Australian has more to go up. And that's why, friends, any attempt to go lower, from my point of view, is just to gather another push for up move. And that's my expectations for the Euro Australian. I do see possible corrections from 126 area, which is the current area, of course. I do expect for possible correction. No one guarantees that, but it's possible. Then each attempt to go lower, right, 100, 200 pips, doesn't matter how much, is another attempt to go higher after that, and 130 should be the final target. The same exactly for the Euro New Zealandian. From my point of view, we should go for 164, 165, and the same story here exactly. We have here this area, duplication is very close. It's around the 160, 150, 162 area. Of course, we can expect here some flags, some corrections, and then another up move. Based on the same story. Based on the same story. Resistance number 1 after the bullish divergence. Resistance 1, resistance 2, resistance 3 is here. That's why I do expect it to go higher. Somewhere to test again on the future. The next weeks, not the next week, the next weeks, I expect it to go higher for this area. Any attempt to go lower is an attempt to create more power for the up move in the future. That's about the crosses, and I prefer concentrate on them. Of course, pound New Zealand and euro and pound Australian are the same from my point of view, but euro is a little better as it already crossed RSI, crossed the 50. Pound still holds. I do believe still we are going higher, but it still holds. Anyway, but I am bullish for pound Aussie and pound Kiwi also. I prefer the euro Aussie and the euro Kiwi. Let's take a look on euro pound, which is from my point of view also very nice pair. We discussed about this sideways move. We said if it breaks, right, go with a possible buy, and we got a break up, right, and now we almost got, well, we can say we got this resistance, right, almost duplicated. We got a forced resistance area. From now we have some correction. This correction might play around for a few days here on this area, right? It could take us lower to 084.50. It could take us again to 084, but it could go higher. And if it goes higher, look for any possible stops around 081.30, I would say, to 085.30 to 085.85, 085.90. That's the area around the 200 moving average. And based to 4-hour chart, right, we had a divergence, of course, here in MACD. Now we're on a down move. This down move could take us to the 20 MA, could take us lower. And if we get a retrace an up move, look for a possible next divergence. That's why I say 081.30, 25 until 085.85.90 should be good area to look for this divergence for a next sell if the pair goes higher. And we can enjoy here for some correction. If it goes higher, we can enjoy then from 100 pips correction. Watch out for this pair. And for a serious and longer down move, it's still early from my point of view, but we can consider that only if 084 will be broken again down. That's the only situation. Until then, I prefer to stay bullish for this pair. And now let's take a look, friends, on the yen pairs. Let's start with the dollar yen. Well, we discussed about this area. This area did not hold 80, which is such psychological area, and extreme RSI did not hold. Did not hold. But not just that, we also got some extreme things, some unusual thing for the dollar yen, and that was the exact thing that happened on Friday. During the last hours when the market hardly moved, dollar yen pushed up. Clear forces pushed it up. Pushed it up. What does it mean? Does someone try to sell the last yens he has until the end of the special week? Why not continue with this up move on the very beginning of the coming week? Why specifically on Friday when no else prices move? Why? Something is well, interesting here. Pay attention for this candle. It's Marabuzo. Pay attention for the RSI. Right? Pay attention for the MACD. MACD created new high. New high with extreme RSI. Friends, we are in extreme. And the behavior on Friday, when they pushed up and during the closest hours, someone tried to sell his yens until the end of the week. It has to mean something. Of course, it could be true, real force, but based on the indicators, based on the extremes, it's just false. Anyway, I believe the dollar yen could go higher and should go higher, but I do expect 150 to 100 pips correction first. That's what I would expect. 150 to 100 pips correction first, based on this extreme. And this Marubozu might open the doors. If it, pay attention for the weekly chart, weekly is Marubozu as well, and a resistance area. If it has and goes, that's also duplication, you see that? Also duplication of the Bollinger Band. If it goes and claws above this current resistance, then dollar yen is aiming 0.84, and then maybe even higher 0.86. But if not, we can expect 4 corrections to the 0.80 first, and then maybe around the 79.70, something like that. 80.30, 80.40 first, and then 79.70. Right? That's what should play around here. We are now on a very extreme, very extreme area, and based on the daily extreme and the 4-hour clear divergence, as we can see, clear divergence, right? Also with the RSI, of course, we should see some play around and take the down move. Dollar yen, from my point of view, has to go and test this line. Too far from the line. Then I would go and look for possible next up moves, or with a break above 81.30, I would say, weekly close above. Until then, the behavior on the last weekend, last Friday, was too suspicious from my point of view. The same, by the way, with all the yens. Take a look on the Swiss yen. Something is on purpose here, you see? Take a look here. Something in on purpose here. And now it's on the resistance. Break and close above this resistance will push us higher for 83 area, or even higher for 94, and then a bigger retrace. It could happen, but now we're on the resistance, and that's exactly the area where we should get the retrace from. I would get also here. I would bet for. I would aim here for 100 until 200 maximum. This correction. On other words, I think we should go here, travel around this line, something like that, before any possible next up move. If it does break straight, we're going for 93 or 94, and then back to the line. This is clearly extreme situation. Last time it happened, you see, it was here. Then we all remember what happened. Is that about to happen again? I'm a little doubtful, as it just broke the 200 moving average, but only market can tell. We had a 1, 2, 3, we now should get 4 before 5, and then we might get a crash. But as for now, I'm looking for this correction, the play around here. The same with all the yens. It's annoying, it's clearly fake, but but the divergences are here, extreme are here, everything is here, weekly areas, weekly resistances are here. We might go a little higher, right, for possible duplication, like from here to here, right, for the resistance, but then all the way back to this line. So yes, it takes time, yes, it's annoying, yes, we might lose on extreme areas, but that's okay to catch the next extreme areas, to look for full correction. So that's my expectations for the year pairs. I would rate them dollar yen first, Swiss yen the next one, Kiwi yen and Aussie yen on the third and fourth place, and all the other yens like Euro yen, of course, could switch to Swiss yen, but all the rest like Pound yen, CAD yen, I would keep for the end. They might be still early, but again, you see how extreme we are. Only question of time. That's what it is. Only question of time. So what we have so far, we have the crosses, the exotic crosses: Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. We have the Euro Pound, which is extremely interesting, and the yen pairs. Of course, the indices, but it's still on the same areas. Still nothing really happened. Right? All the indices. I still expect this divergence to take effect, but it could go a little higher first. What about the majors? I would stay out. I think euro dollar can go higher. I think pound dollar can go higher and should go higher again. And for the pound, I would say a break above the 159, a hold above 159, with a break of this divergence line should open the doors for the pound dollar to raise all the way to 161. That's my expectation, or even higher. Or even higher to 160, 250. Watch out. Break above this 159 with this break of the line should take the pound all the way higher. Euro dollar, I'm also still bullish. I suspect the euro dollar to go for 135 or even higher. But I would be careful, as there is a clear divergence. For euro dollar, I stayed neutral despite of the expected bullish move. For pound, neutral until the break. After the break of 159, we should aim higher. And I can see here a duplication of this flag. That's what should happen for the pound. See that? That's what should happen for the pound. That's why I say be ready. It's possible to happen very, very, very soon. Oil. Well, extremely oil. Weekly MACD just crossing up. We have a clear resistance around 114 with all the political stories. It might be risky to jump in again. No divergences on daily, no divergences on weekly yet. Seems like we get here a break of some flag. See that? Here, right? So we might see some duplication up right before the crash, and with all the political pressures, maybe it's better to stay out of the oil. Sorry, I was looking for 110 for a possible sell. It could be an idea for the 4-hour charts, based on 4-hour directions, right? With any retrace of the 20 MA, like it happened here. We discussed about that, and it happened to the 20 MA. Maybe on the intraday it's possible, but for long run, I'm still bullish for the oil. Any retrace down, from my point of view, is the next buy. Yes, it's extreme. Yes, I expect corrections. Don't get me wrong. But with all the politicals behind, I'm afraid the oil could aim higher. The story with Iran is not easy, and we can go higher. That's why I would say careful with the oil. For the intraday, the short runs, why not? Made attempts, but for long runs, still early. We might go higher. Based on the politics, we should go higher. And higher price on oils most likely would affect the markets. Higher price for oils are not good for the markets, are not good for the market's pressure. Well, that's all, friends. That's all what we have for this week. Concentrate on the majors, concentrate on the yens. Don't get upset with if you didn't catch the first extreme area. The next extreme areas are about to be here, and the retrace is about to happen. Question of time only. Now it's your turn to prove patience. Have a beautiful week. Have a beautiful profits. Thank you very much for watching this video. Yours, Vladimir. Bye bye.